Hi, welcome back. It's okay for the markets at this point in time. Only the broader markets are showing a bit of a sluggish trend. So the mid-cap index is currently in the red, so down around 0.2%. Volume's high, so we've done around 40,000 crores in terms of participation already. But let's get talking on the IT space, because Cognizant actually came out with a very healthy set of numbers and has, as always, beaten in terms of guidance. And however, their outlook remains mixed according to a lot of analysts. How can we extrapolate this to the IT sector? Ankur Rudra of Ambit Capital joins in with his view. Ankur, hi. Thanks very much for joining in. One, how did you read the Cognizant numbers? And two, how exactly have you read the European operations? Do you think that there could be some amount of uptick in terms of Europe in CY13 or rather in FY14 for the likes of Infosys?
Hi, good morning. Clearly, the Indian IT results season began with a bang this time, with better than expected headline numbers from Infosys. I'd say, however, it ended with a bit of a whimper. Cognizant's numbers were at best in line for the last quarter, and the guidance was widely expected to be upgraded following the slightly better than expected results season from the headline IT firms. So I'd say I was a bit disappointed with the overall CY13 guidance. And given the history of Cognizant leading industry growth, this sort of sets a lower bar for the growth ceiling for the industry for CY13. Specifically on Europe, I would not extrapolate a lot from the 12% sequential growth we've seen for Cognizant this quarter, given it's a much smaller business for them, it's a smaller base, and it's tends to be lumpier, given it's a much smaller part of their overall business.
But yet, Ankur, we noticed better than expected management talk from Infosys. Mr. Mahalingam, the outgoing CFO of TCS, also sounded positive yesterday. And even the TCS management, when they gave their guidance, for what they give, it's not a proper guidance, but it clearly was that calendar 2013 is much better than calendar 2012. So in that light, are you really, is the Cognizant result the reason why you are downplaying something, or you were not convinced by the management talk?
See, if you look at the various indicators of demand in the industry, such as the performance and the guidance from the likes of enterprise software companies such as SAP, and some of the larger global bellwethers such as Accenture, they don't seem to be extremely optimistic about CY13 versus CY12. TCS management has been quite optimistic, and credit to them, they have delivered according to that. So I would be a bit wary of extrapolating the optimism management sees about their own business to the rest of the industry. So that's the caution on TCS comments. On the overall industry, if you really see the numbers, the outperformance on a broad base was more on the margins than on top line, really. You've seen Tech Mahindra, HCL Technologies, Wipro all surprise on margins as opposed to headline growth.
So what's your industry growth expectation, and what's your best of class, your middle class, and your lower end in terms of the stocks?
I like the way you put it, but I would not. I wouldn't follow that when I say it. So I think the industry growth rate for the year that's likely to end right now, we expect it to be around 11 to 12%. And for CY13 or FY14, I think it will at least be about 100 basis points lower than that. So I think I'm expecting around 10 to 11%-ish industry growth. Like I said, Cognizant sets the industry growth ceiling. So I think 16% organic growth for CY13/FY14 is the leading edge. The lower edge probably will be a bit higher this time, because we've seen a bit of a recovery at Infosys. Hopefully Wipro will also get its act together, and hence the lower end of growth probably will be in the region of 7 to 8% as opposed to 5 to 6% in the previous year. And in the mid-range, we see the likes of HCL Technologies, TCS probably deliver in the region of 13 to 14%.
Ankur, what is your view with regards to HCL Tech? We do understand there was some amount of management changes and they have a new president and CEO on board. What is your view with regards to HCL Tech and what we can expect from them, especially on the IMS segment?
We quite like HCL Tech's story. It's one of the firms which has seen a dramatic improvement in its quality of business in the last 2-3 years. They've been able to enter many more Fortune 500, Global 2000 accounts. And the management transition, I'd say, actually is relatively well planned. We knew back in July 2012 that Anand Gupta would take over. And from that perspective, nothing really comes as a surprise. I think the fact that Mr. Nair was visibly missing from a few typical analyst events maybe surprised a few people, but I wouldn't read too much into it right now. On the infrastructure management side, particularly the remote infrastructure management service line, which is the strongest growing service line for the industry, HCL remains the top class franchise there, and we keep seeing them winning more than their fair share of business right now.
Okay, what about the smaller guys? Hexaware is expected to release numbers on Monday. Do you expect any sort of positive surprises from the likes?
Hexaware is interesting because how early they had somewhat brought down expectations at the beginning of December, around the same time when Infosys had also brought down expectations, driven to an extent by expected delays in spending. So given how much expectations were lowered, Hexaware could, as a result of that, surprise on those lower base expectations. But having said that, I think Hexaware is a bit more, will suffer a bit more because given its presence in more discretionary-led service lines over the course of CY13, because we don't see discretionary spending improving dramatically this year. Even if you look at the comments that Cognizant made yesterday, they weren't very optimistic about discretionary spending coming all back in CY13.
No, a lot of broking houses as a house are pro-IT, telecom, oil and gas, not the interest rate sensitives, which were the favorites of 2012. Is that how it thinks?
I can't speak for all sectors. I'll speak for the sectors I do cover. So on telecom, we are optimistic. We think we are entering a phase of the market where regulations are becoming lighter and more acceptable. We are entering a phase where competition is becoming a lot more rational, and one can expect reduction in discounting and possibly even tariff hikes going forward. So we are optimistic. On IT, we have a bit more cautious view. We think some of the better performing names such as TCS and HCL Tech will continue to perform better given the quality of the business model. And we are wary of assuming that there is a rising tide which will lift all boats, particularly the likes of Infosys and Wipro. We see a lot of challenges to the heightened expectations on Infosys particularly. So we are a bit mixed on that one. Telecom, we are more optimistic.
All right. Thanks a lot for that, Ankur. And now the Chief Economic Advisor, Raghuram Rajan, is saying something which should give us a hint.